There have been some interesting statistics recently released about Vietnam, with it now accounting for 30% of the MSCI Frontier Market Index, making it the largest and most developed constituent of it. So, is it just a matter of time before it steps up to becoming part of the Emerging Market Index, which is the next stage in its development? Well, joining us now is Dominic Scriven, co-founder and executive chairman of Dragon Capital, the manager of the investment company which runs Vietnam Enterprise Investments, the largest London-listed investment company focused on the country. Dominic, it's great to be able to catch up with you. Interesting subject. We don't often talk about Vietnam, but it has in the background been one of the most attractive markets to invest in the region. What's your view of things from where you are?
Hi, Jeremy. Thanks very much. As you note, I'm in Ho Chi Minh City in Vietnam. So what I see here is, an airport that's full to busting, traffic jams, construction cranes, full shops and restaurants, and an economy that's really growing very fast. Vietnam's GDP as a whole grew by officially 8% last year. But yeah, it's likely to be on the weak side of recording. And here in Ho Chi Minh City, which is the biggest city, we would have had GDP comfortably over 10% last year. So what one looks at is sees energy, dynamism, and growth, really. Yes.
But it's still classified, isn't it, as a frontier investment opportunity. Just explain what this means for those that don't understand where it sits in the grand scheme of things.
The classification frontier market is applied to a set of developing countries with, more importantly, developing equity and debt markets that puts them in a sort of starter class before being elevated, as you said in your introduction, to the much bigger area of emerging markets. Emerging markets have become slightly contentious in a way because it's a vast catch-all definition that would include, China and Greece and Korea, and and it doesn't really fit well. And in a similar sense, frontier markets include some of the African the emerging African economies, and then you've got large markets like Vietnam. And so, as you say, it's 30%, which is the largest. And the position of Vietnam in the frontier markets is becoming rather unwieldy. So we are, as you said in your introduction, we are reasonably confident that Vietnam is on a path to elevation to emerging market status. However, the one thing in Vietnam is you can predict the direction, but you can't predict the timing. So I'm not suggesting anyone holds their breath as of today.
What difference would it make to you as the manager of a fund that is involved solely in Vietnam? How different would your horizons be if it became an emerging market? What opportunities would it give you?
Well, for us as a fund manager, that's less significant perhaps than what it would mean for the country. So the significance of these titles, frontier or emerging market, in investment terms, really relates to the index you're part of, the size you are within that index, and then the number of investing institutions around the world who use that index as a sort of benchmark or guide to their own investing. So, crudely put, I think the amount of money that would be obliged to chase the Vietnam as a frontier market would be about between 150 and $500 million. But the amount of money that would be obliged to find its way to Vietnam, if it were an emerging market, even at the small level, would be well over 10 billion US dollars. So it's a multiple of 20 times in the amount of capital that people would seek to invest. What does that mean? That obviously has significant implications for how easy it is for companies here to raise capital and to raise solid, predictable institutional capital rather than retail capital, and therefore the price at which they can access it, or rather the valuation of their businesses. And for investors in Vietnam, it's obviously a good thing because it means that the companies that they're investors in are valued more highly, and therefore they're making good investment returns. And so it's generally a great thing for, you know, a country to be promoted from frontier to emerging market. Also, and not insignificant here, is the transparency that comes with becoming an emerging market is very beneficial for aspects like governance and transparency and good practice in the way that companies are run, and everybody benefits from that. So it's something we look forward to for sure, Jeremy.
Mm. What about the macro picture and how it affects you with rising interest rates around the developed world? And I know the same thing is happening around in your region as well. How does that impact you on your investment decisions and where you see things going?
Well, yeah, you hit the nail on the head, man. I mean, rising interest rates are the worst possible thing for investors in markets of any description, really. And Vietnam last year was no exception. We've had interest rates that have risen. You know, the government bond rate rose from about 1.5 to over 5. The deposit rate went from 4.5 to 10, and the borrowing rate is now sort of 12, 13, and that's beginning to cause some stresses in certain parts of the economy, particularly those that are the most leveraged. But, you know, markets are funny, but they see all these things in advance, right? So the equity market in Vietnam last year had an atrocious year. I think we were down 35%. And a lot of that is presaging, you know, the difficulties that happen in the real economy. And there's a very interesting debate with people who have time to have these debates about how you can have high levels of real economic growth, and how that doesn't necessarily always turn into high levels of financial economy growth. And people talk about China as an example of this. I think what we all miss in that is that there is definitely a correlation between high real economic growth and good investment performance. But the correlation is not necessarily linear. That means to say it's not necessarily one-to-one in the same time frame. So what we need to keep our eyes out for here is when the pressures that come with higher interest rates begin to have positive effects on you know what needs to be managed better. And then we see, as everywhere in the world, we see rates beginning to top out. I think they probably have topped out here already, actually, and then begin to decline. And that's when you get the whole positive cycle flowing into financial markets.
Let's bring up a share price chart of Vale, the Vietnam Enterprise Investments Limited. As I said, it's on the London market. It's on the far left-hand side of the screen. I've drawn a vertical red line, which was the COVID lows that we had, which hit everybody. Every single asset class was hit. And then we saw this big rebound to the highs at the very beginning of 2022. You talk about last year being a pretty awful year. Indeed, it was pretty bad, but in fact, the lows didn't get anywhere near the COVID lows, to put it into some sort of context. Since then, we've seen a little bit of a rebound. You continue to buy back stock, which is an interesting policy. Maybe you can comment on that as well. But what do you see as the investment potential from where we are here at, what, 573 pence? Or 573 in the London market.
I reference your COVID low. Obviously, it looks like it didn't get nearly back to the COVID low, as you say. However, you know, when you look at the valuation of companies, bearing in mind that companies are always, of course, doing business and having profit growth, etc., and revenue growth. If you look at the valuation of companies, either on a price to book value or on a PE ratio, the Vietnamese market, or rather our universal Vietnamese market, which is sort of 80 companies, is not just back where it was at COVID, but it's also within a whisker of where it was in the 2009 GFC. So, you know, we're relatively comfortable that Vietnam doesn't have a lot of downside from here. You know, we're factoring in relatively anemic growth in profits this year, good economic growth, but slightly slow growth in profits, and or flat even maybe in some sectors. but against that, the valuations are pretty low. And as soon as we get the financial cycle beginning to ease, I think we'll see people returning to the markets. And of course, both international investors who were big investors in the last part of last year, and also, of course, domestic Vietnamese investors. If I could just pick up on your point about buybacks, yes, indeed, Jeremy. We, as a board, I sit on the board. I'm the only member of the manager on the board, but as a board, we're very committed to showing some activity in the market to influence and engage with the discount between the share price and the net asset value per share, common feature in investment trusts. And so, last year we were very active in a somewhat difficult year for investors. The buyback we did yesterday was actually the first one of this year. So we've had generally a much easier year to date. But I'm sure the board would stand behind a continuing presence in the markets in the months ahead, should that be necessary.
Yeah, we must remind ourselves, of course, that Vietnam is technically it's a communist country, isn't it? Still, really, and indeed the president has just resigned. I know the Communist Party is going to meet, I think now, isn't it, to appoint a new leader. What implications has this for investment in the country, do you think?
In a very broad sense, very little. Let me qualify that seemingly broad brush statement. So Vietnam is, as you correctly point out, its principal political entity is the Communist Party, but there is a well-established executive government and also a very punchy and active legislature. So, in fact, the leadership of the country tends to involve four key positions. One is the president. I'll come back to him, but he's the one who's just resigned. He's the head of state, or she. Then, of course, there's the prime minister, who leads the executive, leads the government. And then there's the head of the legislature, what we would call the speaker, who both in the UK and in the US has a similarly prominent role. And then there's the head of the general secretary of the Communist Party. Those roles are, unlike China, where some of those roles have been concertinaed, in Vietnam, they're all held generally by separate people. And so what's happened is one of them has retired and will be replaced. So on the face of it, that's not that's not a very significant event in terms of how it will affect policy. And indeed, politics in Vietnam is all about a continuity of direction, and so people occupy their positions and then they retire. However, I think you're picking on an interesting event in recent times in Vietnam, because what it does show is that there is it's one of a set of moves in I suppose we could say the last 12 months, where a relatively rigorous approach has been taken to responsibility and accountability for malfeasance. So in the horrible months of COVID, there were two small scandals. Well, they weren't scandals overseas, but in Vietnam, they were not small scandals. One of which was artificially boosting the cost of COVID test tickets, and the other was irregularities in arranging repatriation flights from foreign countries. And both of these became cause célèbre in Vietnam, and a number of people in both instances have been sacked from their positions, or in some cases are even being charged. And I think most people you talk to on the ground here would say that the recent early retirement of the president, while it's very clear he had no involvement in any of this himself, absolutely, it is a sense of accountability being demonstrated at the very top. And I think if you ask most Vietnamese people on the on the street, they would be in favor of this sort of demonstration of accountability. Yeah. So I think these sort of things where continuity is highly valued do always cause us to stop and reflect. But I think it's probably a move in the right direction.
Yeah. Okay. Let's wrap this up now with one final question about how you see 2023 or developing. I was going to say developing. In fact, we're already 2 months into the year. Let's bring up the share price chart again, because I think it's worth looking at where we are in the context of where we've come from, and ask you this question about how you feel about 2023 in all honesty. Now, many are going to say, well, look, you're going to say it's going to look really good for this year. But as I said, in all honesty, what's your appraisal for the next 10, 12 months or so?
Okay, so that's a difficult question to ask your fund manager, but I've got two comments I can make. One is that Vale, as we call it, has a 22-year track record now, and over that time, it's delivered a compounded. So that means compound over each year annual net return of about 12% a year. So, that's not, Marshall Wace or any of these whiz bang hedge fund numbers, but it's a pretty good number, and it turns, $1 into, 11 or 12 over that period of time. That's, my aspiration for the future is to continue to deliver returns at the NAV level, and that in dollar terms are slightly higher than nominal growth. So we've got real growth, we've got inflation, and then we've got currency movement, and we need to be a little bit above that. That's the game plan. The short answer is I bought shares for myself in October.
Which is when you were down at recent lows, which is interesting. It says a lot about the outlook. Good call. Look, Dominic, we do have to leave it there, but thank you so much indeed for joining us. It's been an absolute pleasure getting insight into investing in Vietnam. We wish you well. Thank you.
Thank you, Jeremy. Thank you very much. Been a pleasure to be on your show.
It's been a pleasure. That's Dominic Scriven from Dragon Capital, the investment manager of the company which runs Vietnam Enterprises Investments. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.